Hi folks, how you doing? Hope all is well. Liz Truss has just announced a U-turn in corporation tax, and what are the effects on the stock market right now? Well, firstly, what does it mean? Well, corporation tax is the tax that companies pay on profits. So after they have made their products and they sell their products for a profit, that profit is then taxed. And that is taxed at 19% currently. And the government was going to keep that at 19%. But now what has happened is Liz Truss has instead said that they are going to keep the planned rise of corporation tax from 19% to 25% from the 6th of August. That's the start of the next tax year. So I was really intrigued to see what would happen on financial markets. So if a company makes less profits, then that means that the share price should go down. Or if the profits are taxed more, the share prices should go down. But what we've actually seen, so you can actually see down here, I've got my list of kind of favourite stocks that I track, and you can see that the markets have actually not reacted too badly at all to that. They see it as a sort of benefit to the growth in the economy. I mean, because if well, maybe not a benefit to growth, but like if companies are taxed more, then that can go back into the British economy, which would then stimulate potentially more growth or benefit the people more. And so that's kind of what was expected anyway. So what has happened is the government have announced all of these measures to try to stimulate growth, and the markets have reacted and said, no, we don't think that's going to work. And now what's happening is they're rolling back these measures one by one, and saying, and the markets are saying, well, that's what we kind of thought was going to happen anyway. So all the stock market seems to have priced in already that the corporation tax was going to rise. So that's why we're not seeing too much of a difference here. So see, you can see that here, that there's the kind of U-turn in the government. But this channel is not about politics. We're about investing, and we're about finance. So I really want to kind of talk about finance and investment. So let's have a look at the GBP USD rate and see what it's done. So it's not actually kind of reacted too well. It's bounced up and down and around. It's not reacted too well, to be honest. But the dollar is just strong just now, and the pound is just weak. It seems to be gone a little bit further than it should have done. You can see that if you're British, you've kind of lost around about 17% versus the dollar, so it's going to cost us about 17% more to go to the United States. But investors from the USA can get 17% more for the money by spending it here in Britain. So it should be quite good for things like tourism, and it should be quite good for things like inward investment. What's bad about that is it might make things more expensive for us. And also what it means is the Bank of England are going to have to put up interest rates to then try and strengthen the British pound. Now, how does that work? Well, if the interest rate is higher in this country, it means more people are going to buy our currency. But at the moment, the dollar is perceived to be safer, and the interest rates are a little bit higher, I believe. I don't want to trick you guys on that. So US interest rates. So let's just check that. Current US interest rate is 3.08%. 3.08% at the end of September 2022, and I don't want to trick you guys as well, so let's get the UK interest rate correct as well. So versus the UK interest rate of 2.25%. So there you go. So money is flowing to the dollar and away from the pound right now. So by raising UK interest rates, we should see that the money start to come back to the pound. So what does this mean in terms of kind of going forward? Well, it kind of shows that investors are kind of losing confidence in the UK market. I did a little analysis, which I want to show you kind of on my next video, of the FTSE 100 and which stocks have gone up and which stocks have gone down. And it turns out that 19 stocks out of 100 are up this year so far in 2022, and 81 are down. And that just shows the confidence in the sort of UK market. So of course, the FTSE 250 is more representation of the UK market, and that is down even more than the FTSE 100. Whereas FTSE 100 stocks tend to be more focused globally, but you can see that the companies that are focused globally make up the majority of the 19 stocks that are actually up. So yeah, I just wanted to kind of show that with you guys, and it'll be interesting to see over the next couple of days what happens with the stock market, and we'll see which companies can kind of benefit, which companies is not going to benefit as much. UK focused companies are obviously going to take a little bit more of a hit than global focused companies, because with that corporation tax rise, that's only attributable to the UK. And so companies that are based more in the UK are going to be affected more by that corporation tax rise from 19 to 25% in April. And I own my own business as well, and so this is going to affect me. But I think people owning businesses understand that that tax rise is going to benefit the greater economy, and it's going to go back to the people that need the money the most. So it doesn't bother me, and it won't bother the big companies, and especially it won't bother the companies that are more global. So if you kind of have a look at the stocks down here, we've got the top riser of the day just on my watch list is Lloyds Banking Group, and then second is BT, third is Aviva. They are all UK focused, only UK focused. So the confidence maybe is returning a little bit because the government's crazy budgeting ideas are being rolled back. Anyway, hope you guys enjoyed. I will catch you in the next video, and we'll talk a little bit more about the stocks and less about this whole kind of political situation, because it doesn't really interest me as much, but I thought it was useful to talk about how that was actually impacting the stock market. So I'll see you guys on the next video.